Hi everyone, welcome back to my channel. Welcome back to yet another technical analysis video for tomorrow's expiry. As always, let's begin with US futures. As we had discussed that, around the 200 DMA, the markets were finding support and this could have been a double bottom. But for the moment, doesn't really look like. But also, I am not convinced that it could be a bearish entry, a short entry right now until the markets give a successful closing below 32,900. And this entire zone, right, between 32,900 to 33,700, this is a very noisy zone on a daily. You see, there's like rejection wicks from the top, from the bottom. The market is actually confused, probably looking for a stimulus, probably looking for some kind of news that could give it direction. However, considering that the markets don't close below this, we are yet not convinced to be bearish in the US markets. But in any case, the markets do close below this today, below 32,900. There is a space of almost 300 points for the next immediate support. So that could reflect in our markets. However, this is not where I'm exercising a lot of caution. The caution I'm trying to exercise is the DXY, the US dollar index that I see going up right now. US dollar, this zone that we mentioned, the 102.7 zones after this breakout of the downtrending parallel channel. This zone is was of great importance. Markets had faced multiple resistances here, and the structure that you see right on a daily candlestick pattern, this is a pole, this looks like a small flag, and this looks like the breakout. So in any case, this structure prevails and the markets do close above these levels, 102.7, 102.8 levels. Then our next target is the 200 EMA, 103.7, above which there's 104.5 levels. So yes, if at all bullish momentum does follow in dollar, we could see it reflecting on our charts. We could see that play out on Nifty, Banknifty, and probably like you see how correlated markets are. Like you see these 2-day green candles, and when you correlate that to our Nifty, you see 2 red candles. So that's how the dollar actually works along with the global markets and our markets. But anyway, this is not a convincing analysis to just go short in the markets blindly, because technical analysis also helps. So we'll look at how Banknifty and Nifty could play out for tomorrow's expiry. Let's start with Nifty. On a daily, this zone, as we discussed in the last video, 18,220 to 18,200 zones, these were very important zones. And if the market did hold up here, it could be a consolidation on a daily. But considering it's closed below this, and in any case, US markets outperformed tonight and they seem bullish, and we opened directly above 18,229, 18,230 and do not retest today's low, then in the medium term, this was just a healthy correction. And after such a strong uptrending rally, this was a decent correction from where we could further go on upwards. So this last 2-3 hours ka move, if at all we open above 18,230 and directly start going up, then this could be considered a trap, because since it's expiry tomorrow, such traps are made to attract the retailers to short the markets heavily. And if the market opens gap up and prevails, then there could be that could be a stop loss hunt that could lead to a lot of unwinding of whoever's long puts or short calls at this moment, and that could lead to a bullish rally tomorrow's expiry. So I'm going into the expiry with a neutral bias. However, let's break it down on a smaller time frame. If we move into hourly, and if in any case you guys had this parallel zone plotted that I was strongly recommending, right? This parallel channel, it finally broke down, and the breakdown we got was on Tuesday, that's yesterday, just around the time when markets were closing. So in any case, someone actually was plotting the channel and trying to play the channel out. It could have been an overnight BTC trade also, or even after market open. Like the first candle is an open high candle, so the markets haven't even tried to jump back into the channel. So this was a very confirmed entry for anyone who's short in the market. And the market from 18,300 made a low all the way down until 18,100. That's 200 points in Nifty, right? That's more than 1%. So that could have been an amazing intraday trade. However, the reason that I am not entirely bearish right now is, allow me to plot it for you. The reason I'm not entirely bearish, at least on hourly, if you notice, right? This strong support zone that you see, this is the first, this is the second support, and now there's a support that's pending somewhere around these 18,050 levels. Now why that's very important for me is because it's a very strong point of confluence, because this trend line that you see that's been propelling the market upwards, this strong trend line confluences with the strong horizontal support along with the 200 EMA on an hourly, because this will, by the time markets open tomorrow, and even if they hover around a bit over here before they start a fall, then this could be a point of confluence with a dynamic support, a horizontal support, and the 200 EMA on an hourly. So it would not be the smartest idea to short, and shorting the markets at the bottom of a structure could not be the best risk reward. The best, most favorable risk reward could be finding longs around 18,050. In any case, we do happen to come down till there. So yeah, and let's break it down to a 15-minute time frame so I can explain this to you more clearly. On a 15-minute time frame, now we have three scenarios, right? For tomorrow's expiry, we could open flat, gap up, or gap down. In any case, we open slightly flat to negative bias and markets take out 18,120. You have a quick scalp intraday until 18,050 levels. Why we discussed why it's so important. On daily, on hourly, it does confluence with a lot of strong supports. So I would recommend you to book all your shorts. If at all you get an opportunity to short in case of a gap down opening breaking 18,120, you could play out till 18,050. That's 70 points. That's good enough to play out on an expiry because premiums could expand. But this is a very strong support. It's a psychological level, and also price action wise, technical analysis wise, it is a strong support. So I would want you to exercise caution if at all you are holding your short somewhere around here, and that's only if the market breaks today's low. However, my conviction tells me that today's low might not be taken out, but that's a probability. So in any case, we open flat and we try to go upwards, right? Now there's a strong resistance here as well. Like how this is confluencing is this downtrending resistance that you see that has been pushing the market down from the point of interaction with this from around 18,366. We fell down all the way to 18,126. So obviously this is of great significance. This is a very strong resistance. So now our long entries for tomorrow, right? Whoever's interested in long in the market intraday expiry, there are no option buying long entries in any case of a flat or a gap up opening until you see a 15-minute closing above the 200 EMA. That's 18,250, 18,260 levels. In any case, we open flat, right? In any case, we open a strong gap up. Now, there are two ways a gap up could be played out. If we open, say, somewhere around 18,250, 18,260, the first 15-minute candle, if it anyway looks like it goes down, retest these zones, and then makes a hammer, a bullish hammer, a strong engulfing green candle over here, that could be a long entry, but it's only above 18,260. A 15-minute candle closing above it or an opening and sustaining 15-minute candle above it, we are going to go long from 18,260 with our first target being 18,330, 340 levels. That's a strong resistance because the market has spent a lot of time consolidating, accumulating over there before it could finally break out. So above 18,250, we are long until 18,330 where we could partially book our longs, and if at all you see a 15-minute candle closing above 18,330, we could trail tightly for 18,450. That is Monday's high. So our target for long for tomorrow's expiry is, in any case of, okay, the three scenarios were in a flat to negative biased opening below 18,120, any 15-minute candle closing, we are going to book all our shorts around 18,050, but an opening or a breakout on a 15-minute candle above 18,250, we are long till 18,330 followed by 18,450. So that's Nifty for tomorrow. Now moving to Banknifty. Banknifty looks rather stronger right now on a day. On certain time frames, Banknifty looks stronger than Nifty. So if at all you are interested in playing out longs, I would recommend playing with Banknifty if at all you want to play long tomorrow. And today's candle, right? This zone you see. One second. This entire zone was a very, very strong resistance where we faced resistance on the 21st of December, the 4th of Jan. This was a fake out. Then we spent some time consolidating, accumulating here before the final breakout. So this retest was pending because after the breakout, we did not actually get a retest. And if at all this is a retest, this is a very healthy retest and we are going to start a upwards trajectory from here. So until on a daily, today's low, that is around 43,400, 400, 350. Until these zones, and if at all you are a conservative trader, until you see a closing below 43,200, there is no overnight positional short trades. There is not a lot of bearish sign in the market. Just looking at two red candles on a daily does not mean the markets are bearish and you are supposed to short it. Wait for a confirmation, wait for the setup to walk up to you. However, looking at an hourly in Banknifty, this looks like a rounding top pattern, but it also could be profit booking because all-time high zones, if at all, you see a big red candle on an hourly or an intraday time frame, a lot of people would consider that as the market's reversing or suddenly turning bearish. So there are follow-up candles of that, but that's only a healthy retracement for me. Plus this zone that you see, right, 43,400, this was a strong zone of resistance where the markets tried to close above it, could not. Again, tried to close above it, but there was no succeeding candle, spent some time consolidating, then made it a support, and finally we found support over there again on an hourly. So the best way to trade it tomorrow on a 15-minute time frame if you are trading intraday is, as I told you earlier in, I don't know, a lot of videos until now, the channel that you see, the parallel channel in which the market has been trading, we reached the bottom end of the channel today. That was also coinciding and confluencing with somewhere around the 200 EMA on a 15-minute time frame. So that could have been a long entry anywhere. This bullish candle closing above the 200 EMA on a 15 and taking support from a very, very strong parallel channel bottom was a very good long entry. So Banknifty rather is easier to trade tomorrow. The three scenarios would be if you open flat, gap up or gap down. In any case, we open flat, the entire zone. 1 second. This zone between 43,500 to 43,750, this entire zone is entirely a no option buying zone. Calls, puts, whatever. You are not buying options here. You are not longing options here until the market is consolidating between 43,450. Yeah, 450 is a safer number. 43,450 and 43,750. If the market opens flat between this, we are not going to take any option buying trades until there's a strong convincing candle closing either side. Now, in any case, it closes above today's high, right? We start moving above today's high. We could go long with our stop loss below the 200 EMA on a 15-minute time frame. We could go long there, and our first target would be the high that we've made on Tuesday, that's yesterday, and also the high that we made on Monday. So this is a very strong resistance zone. So in any case of a flat opening and the markets crossing 43,750, 800, our first target is 44,090, 44,100 levels, where the markets could see another rejection. So I would recommend you to book your longs there. And in any case, we open. Now what could be surprising and tricky in the markets tomorrow is, if at all the global markets underperform and dollar outperforms and we see a bearish opening tomorrow, if at all we open gap down and we break this zone, right, which is around 43,370, 43,350 zones, then the markets could turn super bearish, and there's not a lot of support here. You see intermediate supports here, but I think the next important support would only be around 42,850 to 42,900 levels. So that we could also play short tomorrow, but we have to wait for a 15-minute candle closing below or a strong gap down opening that would lead to a candle closing below 43,350, and we could short the markets for 43,000 psychological levels, followed by 42,850, which is a very strong support. In any case, we open slightly gap up. It could get tricky because I believe the markets could become highly volatile here. If we open somewhere here, the markets could look something like this. It could just consolidate in this zone and we could have a very boring expiry in Banknifty. So the most ideal case as an option buyer would be a slightly flat to positive biased opening, and anything crossing 43, 780, 800 levels, we are going to go long and hold our longs until 44,000 and 44,100 levels. And the same way for shorts below this trend line, 43,450, our first target would be 43,350, which is a very small target, not a favorable risk reward. But below 43,350, yes, we have a long, big space to play out with. So I guess that should be our analysis for tomorrow. I wish you guys a very good expiry, protect your capital, and if at all you could, I would recommend you to trade next week contracts whenever you're trading Thursdays, because the risk of ruin is avoided. Your premiums do not turn to zero. You have time to think logically before you exit or enter a position. So having said that, all the best, and hope you guys make money tomorrow, and I'll see you guys tomorrow with another analysis video.